In terms of markets today, of course, as I mentioned, down 0.4%. What did you make of it?
Ingrid, look, it certainly was another disappointing day. Certainly continued to see that cautious trading. Mostly what we did see on the market yesterday, we were fairly light on in terms of economic data. So again, I think it was a fairly stock-specific performance today. Again, a bit of a continuing theme on what we did see yesterday. Of course, we opened up lower this morning following those lower leads from overseas markets. At about 12 p.m, it did look like we started to see a bit of an upturn in the market ahead of that RBA speech out from the Assistant Governor Kent. But we did then see the market falling off again, closing down 0.4%, as you said, given the fact that there really was no new commentary out from that speech. Overall, seeing those sectors dragging lower, no surprises, being that energy sector. We are continuing to see that oil price falling off, and that's exactly what we did see over in the US. And of course, that financial sector, again, coming into this morning's trade, we did see a lot of the major banks overseas underperforming, so we were expecting a relatively flat start in that financial sector this morning, but as you mentioned, really being dragged down by Westpac today. Overall, the materials sector was actually the outperformer. It was the best performer on the market today, despite actually seeing relatively flat commodities coming through overnight. We actually did continue to see Atlas Iron coming under pressure. It has done over the last number of trading sessions or so, still seeing that iron ore price continuing to come under pressure. But as I said, another fairly cautious day on markets today.
The show, but of course, Gail Kelly stepping down as Westpac CEO with Brian Hartzer to replace her. What do you make of this news, and I guess the reaction from the share price today?
Ingrid, it was quite an interesting one, of course, seeing the market reaction down 1.1%, as you said. I think it was a bit of a surprise, and it did come as a bit of a shock to investors, and that's obviously why we did see the falls in that share price today. But of course, there were some rumours around recently, some analysts actually predicting that this wasn't too far off. Our Bell Potter analyst T.S. Lim actually came out earlier saying that although it was a bit of a surprise seeing the resignation by Gail Kelly, probably no surprise is actually seeing the appointment of Brian Hartzer as the new CEO, given the fact that he actually was appointed back in 2011 just under Gail Kelly. So I think he was pretty well placed in order to succeed her. Certainly remain very optimistic in his abilities and obviously his ability to continue success in Westpac. We have seen since Gail Kelly was in the position since about 2008, she really has driven an exceptional performance in those Westpac shares, up about 25% or so since she stepped in, and that's in comparison to, say, the financials index, which is up about 1%, and the overall market, which was actually down about 6.5% over those number of years. So she really has driven a very successful performance. But T.S. Lim certainly expecting that the new CEO will continue to drive this. Certainly haven't changed our outlook on the stock. We do still actually have a hold on the stock. We do expect that there will continue to be some pretty good momentum over the next 6 to 12 months or so. But I do suspect that the new CEO will potentially have a bit of a tough time ahead. Of course, there is those looming interest rate rises, that financial inquiry report that's due out at the end of this month, and of course a slowdown in that mining investment area. So I think there's a bit of concern about where the growth is coming from. But overall, it was a fairly interesting performance today. I do think it probably is only a bit of a short-lived decline in that share price. Don't expect to see any further falls over the next few trading sessions.
GrainCorp down about 1.1% in the end after those results.
Ingrid, that's right. A bit of a disappointing result that came through, but again, I don't think it was too surprising given the fact that they really have continued these challenging conditions, these drought conditions, which of course is affecting a lot of their grain volumes and their crop. And of course, we saw a very weak first half result. So again, I don't think it was too much of a surprise. If we look at some of those numbers, it was actually in line with our expectations. Those net profits down 46%. Those earnings were down about 26%, and that actually missed our expectations by about 6% or so, but basically in line with most of our numbers that we were expecting. One of the positives that actually came out of the result was in fact a fairly strong performance in their malt business. Their earnings were up about 24%, and that's actually despite seeing a reduction in a lot of beer consumption. So that was quite a positive area, but as I said, really their grain division is the one that is continuing to weigh on this stock. They also came out with some outlook commentary, which also looked a little bit subdued. They did say that their conditions are continuing to suffer, expecting lower grain production and of course volumes to come through in the next year. So we certainly do remain quite cautious on the outlook as well. We do know that they are continuing to face significant competition, particularly for grain across Eastern Australia. They've basically moved from being a virtual market monopoly to now facing increased competition across all of their major ports. So I do expect that that competition will continue to impact the stock. It is still down about 30% or so since that Archer Daniels Midland offer was rejected almost a year ago now, and unfortunately the shares haven't recovered since then. So do expect that those earnings will continue to come under pressure. So I think the outlook still does remain a little bit cautious.
Yeah, Michael, and just finally on Optus, shareholders responding to Singtel result. What do you make of it?
Ingrid, that's right. We did see a fairly strong performance today. We actually saw some strength coming across all of their businesses, so that was quite positive. Of course, we know they are or do provide services across Asia, of course, here in Australia being Optus, and of course over in Africa as well. But it does look like we are continuing to see a bit of strength coming back into Optus. Their net profits were up about 5.5% or so, and certainly continuing to improve on their customer experience, and in particular delivering on that 4G network, which we know there is a high demand out there for. They are actually expanding that 4G network to about 90% by April 2015, so certainly continuing to deliver on that. We saw their earnings higher, and we also saw some growth in their revenues this quarter, which was quite good given the fact that we haven't seen such strong growth in previous quarters. So I think overall the result was fairly positive. We do think that they are quite well positioned for future expansion, given the fact that they are quite well diversified across telecommunications, media and technology as well. So that probably gives them a bit of a competitive edge. And certainly Singapore and Optus over here in Australia are continuing to deliver some quite good cash flow growth. So we do think that that will continue driving the stock. So certainly saw quite a strong performance of a fairly strong result.